So the Forex market has a lot to do with your personality, what kind of person you are. And it might also interest you to know that if naturally on your day-to-day activities, you are not someone who is very patient, then you need to select the kind of Forex trader you are, because I bet you are not going to be patient with the Forex market. And trust me, the Forex market can test your patience to the limit. It can test your patience to any limit, the limit you don't even believe that is possible. So there are four main types of Forex traders. We have the scalper, we have the day trader, we have the swing trader, and we have the position trader. A scalper is someone who holds onto trades for a few seconds from few seconds to few minutes at most. So sometimes a scalper just enters the market. He's okay with making 5 pips or 3 pips or 10 pips. But for you to be a good scalper, you need to have a very good amount as your capital, because a scalper can use 10.0 standard or one standard lot size and make 2 pips and make $20 and is out of the market, or can make 5 pips and make $50 and is out of the market, and he can make 10 pips that is equal to $100 and is out of the market. So these are for people that does not have patience at all to wait for the market to do what it has to do before it gives them profits. Their main objective is to grab very small amount of pips as many times as they can throughout the busiest time of the day. So most scalpers like trading the market when the volatility is high. And most times the volatility of the market is always high at the beginning of every session, 1, at the intersection of the London and the New York session, 2. These are the major times that the Forex market is very volatile. And then the 3rd time is when there is news. A scalper can wait for very large news, and before you know it, he has entered the market and makes 10 pips and is out of the market. 10 pips can be $100, it can be $1,000, depending on the lot size he or she is using. Sometimes some of them end up entering small lot size, but like 10 different positions. So if you use 0.01 or 0.1 times 10, that is still equal to 1 standard lot. So some people do that, take 10 pips, 5 pips, 20 pips, and they're out of the market. Then we have day traders. The day traders usually pick side at the beginning of the day, acting on their bias, and then finishing the day with either a profit or loss. These kinds of traders do not hold their trade overnight. So for you to be a day trader, all it needs is to take a position within the day, anytime during the day. And most day traders don't hold trade overnight. So they must close the trade before night, either is a profit or a loss. It doesn't matter. So those are day traders. So those ones can take as much as 50 pips in a day or 80 pips in a day, depending on the pair. Sometimes you have pairs that can do as much as $100 pips, sorry, or 200 pips in a day. Pairs like GBP pairs are very good at that. A GBP pair can do 200 pips in one day. It can even do 300 pips in one day. So those day traders are okay with whatever pips they get, but most of them don't even take all the pips. They can take the 50 pips out of the 300 pips or 200 pips, and that is enough for them for the day. So that's day trading. They do not hold trade overnight. Then we have the swing traders. Swing traders are for those people that like to hold on to trade for several days at a time. These types of traders can monitor their charts throughout the day. So they dedicate a couple hours analyzing the market every night to make sound trading decisions. Fortunately, this is the type of trading I prefer. Like as I'm talking to you right now, I have some trades I've been holding since Wednesday last week. I have some trades I've been holding since Wednesday. So you can as well be the good thing about swing trading is that it enables you to not be on your laptop every single minute, every single hours. Most times, personally, I don't trade on Mondays. I don't trade on Tuesdays. I start analyzing my trade from Tuesday night or evening, and then look for entries on Wednesday and hold the trade from Wednesday, Thursday, Friday. Sometimes I close on Friday. Sometimes I hold till the next week. Like the trade I'm holding right now, I closed some of them on Friday, and some of them are still running. I still have about 3 positions that are running right now that I took from last week. So that is swing trading. Then we have position traders. Position traders are those that have trades that last for several weeks, months, or even years. These traders know that fundamental themes will be the predominant factor when analyzing the market, and therefore make their trading decisions based on them. No matter what style you choose, you have to make sure that it truly fits your personality. Like I said earlier, Forex trading, the type of trader you are depends on your personality. Those who are position traders are those who have extreme patience and have too much money in their account. You cannot have $1,000 and be a position trader. You cannot have $100 and be a position trader. Position trades last for weeks, months, or even years. There was a time I held a trade for 2 weeks, and those trades where that period I grew a 200 pounds account to about 1,200 pounds in about 3 weeks. So it depends on you. Sometimes I interswitch between swing trader and position trader. I can be a position trader with $200 because I already know the nitty-gritties. I already know things that are involved in holding a trade for that long. I can analyze a trade and see that this trade is going to get to 500 profits, 500 pip profit or 1,000 pip profit in the next maybe 3 weeks or 2 weeks. So I can hold that long. But fortunately or unfortunately, these days, I no longer have that patience. So I stick more with position trading than I do with position trading. So these are the types of Forex traders we have. So what are Japanese candlesticks? If you open your chart, you are going to see things similar to this. These 2 things you see here, they are called the Japanese candlesticks. For some people, the color of your buy candle might be different. In fact, always the color of your buy candle is always different from the color of your sell candle. Some people even prefer to tweak it. Like me, there was a time I preferred to use blue for my buy and red for my sell. But mostly the what do you call it? When you open your MT4 for the first time, the default setting of your candle is just like what you are seeing here. White is always buy, where black is always the bullish, bearish market, which is a sell. So there are components to a candle, but before that, the person that discovered this secret technique is called Steve Nissen. He's the one that discovered this secret technique of a Japanese candlestick, learning it from a fellow Japanese broker. Japanese candlesticks can be used for any time frame. So any time frame you open has its own different candlesticks. Now, what you need to know is that a monthly candlesticks comprises of 4 or 5 weekly candlesticks. If a month has 5 weeks, the candlesticks that will make up that monthly candle will be 5 weekly candles. Then daily candles, the weekly candle is made up of 5 daily candles because there are only 5 days you can trade in a week. The daily candle is made up of 6 4-hour candle because there are 4 hours. There are 6 times 4 gives you 24. So which means there are 6 4-hour candles that make up a day. The 4-hour candle is made up of 4 1-hour candles. The 1-hour candle is made up of 2 30-minute candle and 4 15-minute candle. Just that way, that is the way it is broken down. So a single candle you see on daily time frame, whatever that candle has done, is what a summation of what 6 4-hour candles did in a day. They are used to describe the price action during the given time frame. Japanese candlesticks are formed using the open, high, low, and close of the chosen time period. So the candlestick has 4 components, which is the open. The open is where the market started from. For a buy candle, the open is always at the bottom, but not the lowest part of the candle most times. It can be the lowest part because a market can open at the same place and keep going up without coming down. So if a market keeps going up from where it opens and never come down, the open and low of that candle will be the same value. But if a market opens, goes down a little bit and starts going up and closes above, then you will have a shadow, what we call shadow or wick. If you look at this candle, the big part of the candle is called the body. This small pin part, or like call it the slim part of the candle, they are called the shadow or the wick. What it shows is that when this candle opened, it went down a little bit and then came up to the place where it opened and then started going up. Then when it got up here, it went further, it went up a little bit and then came down a little bit and closed below the highest point. So these are the things that make up the open, the high, the low, and the close. Most times you will see OHLC. That is called the open, high, low, close. So wherever you see OHLC as an acronym, it means open, high, low, close. Then the sell candle or the bearish candle is the direct opposite of the bullish candle. If the close is above the open, then a hollow candlestick, usually displayed as white, is drawn. So what this means is that at the initial place, if you did not tweak your candlestick color, this is what you are going to have. If the close is below the open, then a filled candlestick, usually displayed as black, is drawn. The hollow or filled section of the candlestick is called the real body or body. The thin lines poking above and below the body display the high or low range and are called shadows or wick. The top of the upper shadow is the high. That's the topmost part of the shadow. It's called the high. The bottom or the lower part of the shadow is called the low. These candle colors, however, are changed by most traders. I don't know if we are following so far. If you're following what I'm saying so far, type 2 on the chat box, type 3 on the chat box. If not, if you have a question, you can raise your hands and I will unmute you to ask your question. Okay, thank you, Julius. Thank you, Joseph. All right. I believe everybody's following so far. So that takes us to the next part of the training, which is support and resistance. Now we are going into the intermediate part of Forex trading. Support and resistance is like the intermediate part of Forex trading. So just give me a minute. Let me pause the recording. Just give me a minute, please. All right. By this time, if you don't have your pen and paper, I'll urge you to go and get that, because what we're going to be talking about now is a little bit technical. In fact, most of the technical analysis 90% of technical analysis is based on support and resistance, or even more than that. That is basically what the market analysis is always based on. We have the horizontal support and resistance. We have the how do you call it? It's not vertical. Like some people use the horizontal, some people use trend lines, and trend lines is not actually a vertical. When we get to that, we'll figure out what to call it. Support and resistance is one of the most widely used concepts in Forex trading. Look at the diagram in this picture. Look at the diagram on your screen. As you can see, the zigzag pattern is making its way up, which means this is a bullish market. When the Forex market moves up and then pulls back, the highest point reached before it pulled back is known as a resistance. As the market continues up again, the lowest point reached before it started back up is now a support. In this way, the resistance and support are continually formed as the Forex market oscillates over time. The reverse is true for a downtrend. So whenever we are going to talk about on the bullish market or uptrend, the reverse is going to be the case in a bearish market. One thing to remember is that support and resistance levels are not exact numbers. Oftentimes, you will see a support or resistance level that appears broken, but soon after find out that the market was just testing it. With candlestick charts, these tests of support and resistance are usually represented by candlestick. So all this plenty English now, let's put it into perspective using the chart you are looking at here. Now, if you are seeing my mouse, you will see that this market started moving up from this point. It got to this place and stopped moving up and then did a quick pullback. This place where the market stopped before doing a pullback is called a resistance. So think of it as your ceiling and the floor in your house. If you jump up now, even if you happen to be Michael Jordan that can jump so high, no matter how high you jump inside your house, you will always, even if you get to your roof, you will find out that when you get to the roof will prevent you from going higher. So that roof is called your resistance. It is what is preventing you from going further up and maybe breaking your ceiling and coming out of your house. That's a resistance. Then when you land on the floor, the only thing holding you from not breaking your house and going down to your neighbors or then to the next floor is the floor. So it is called the support. That is what is supporting you. So that is exactly how you can think of support and resistance. If you break your floor and start going down to the floor below you, then it is said in Forex market that the market has broken the support level. If you break your ceiling and continue going up, it is said in the Forex market that the market has broken the resistance. So take, for instance, what we have on this picture. This market formed a resistance here, the first resistance. It pulled back to this support. It could not go further down. It started going up. And then it broke through this resistance. So most times, once this happens, you will know that you are in an uptrend. It broke through the resistance. It came down again and found another support. And then came up again, broke through this resistance, then found another resistance above here and pulled back. Now, from here, it didn't show us what the market actually did. Sometimes it might end up coming down and breaking this support. The major thing is this. Most times, you will always find out that once the market breaks a resistance, it comes back to retest that resistance. And once that resistance holds, the market uses that resistance as a support. That is where we talk about resistance turned support. So the opposite of this happens in the downtrend. The difference is this: in an uptrend, the market always makes higher highs and lower lows, and higher highs and higher lows. So in essence, in an uptrend, we have higher resistance levels and higher support levels. Let's take a look at this. This resistance was the first one. When the market came down and found support and started going up, the next resistance that the market created was higher than this previous resistance. So this is called a higher high. It came back down again, found a support. This support is higher than the previous support. So this is called a higher low. It goes up again, broke this resistance, formed another resistance that is higher than the previous two resistance. So this is called a higher high, another higher high. Then the market came down. Let's assume it formed a support here. This will be called a higher low. The market is basically made up of lows and highs. That is basically what the forex market is made of. So the question now is, what is the market forming? Is it forming higher highs and higher lows? Or is it forming lower highs and lower lows? When it comes to the uptrend markets, you have higher highs and higher lows. The downtrend market has lower lows and lower highs. I don't know if this is actually clear. If there's something that is not clear here, maybe you might want to ask a question. Now, let's take a look at the chart and see exactly what I was talking about. If you take a look at this left side of this, let's divide this chart into two. This first one, you know, there are two charts here, one above and one below. The first one here, divide it into two. This part is going down, this part is going up. So the left part is the one going down. So let's look at the right side. If you look at the right side, you're going to see that this market is making higher highs and higher lows. The market started going up from here. It created a high here. It could not go up, it came down. So this was the first resistance created. It came down and found a support here. It went up again. It broke through this resistance. And then what happened? It pulled back. If you notice what I told you earlier, the market will always turn the previous resistance to a support. Sometimes it can go further down. But the major thing you need to know is that most of the time, the market turns a previous resistance to a support. So this was a resistance. If we draw a line here now, I am very sure you will notice it even with your eye, that where the market found a support was just on top of this previous resistance. So this is a high, this is a higher high, this is a low, this is a lower low. Then the market came back, broke this second high and formed another higher high. And then came down. In this case, it did not reverse at exactly this particular resistance that it broke. It went a little bit down, but it still found support somewhere around that former resistance and then went up. Someone like me personally, when this market did this, one, created a resistance, came down here, found the support, went up, created the resistance above the first one, came up or just on top of this resistance and found support. For most people, this will be a very good place to buy because they will say the market has found support. You buy from here and take the market all the way to here, probably take your profits, and then the market comes down again, found another support, and then some people will also buy here. Then the market went up. If you take a look at this, the move from here to here is big. The move from here again to here is big. But the move from here to here is a little bit small, even though it created a higher high, but it didn't go that much, that far, that much. So most people like me, if I take a look at this, what I'll be looking for is a sell opportunity because this market did not create, it was not convincing enough creating this high. And that is why whenever you are trading pullbacks, you need to be careful, because you might be trading a pullback that is the end of a trend. This pullback here now happened to be the end of this trend. So it went up, it didn't go further high that much. Then it came down and broke this support. Now we are in a downtrend because the market broke the last low. If this market came down here and found the support here, didn't break this support, possibly it would have done another buy to the upside. But the market broke through this last support here and then went down below it and then made a pullback, created a lower high instead of a higher high. Now, personally, I would have started looking for a sell opportunities, because I'm going to call this a lower high, which indicates the beginning of a downtrend. And then the market started creating lower high. This is the last high here. This is another high. This high is lower than this high. Then it created a low here. The low here is lower than the previous low. Then it came down, created another low here, which is lower than this low. So the downtrend actually became active here. This is no longer just a retracement. It now becomes a change in trend or a trend reversal. So let's go to a retracement, because there's a difference between retracement and a trend change or trend reversal. Every single thing that happened here, higher high and higher low, this was a retracement, this was a retracement, this was a retracement, but over here, this is no longer a retracement, but a trend reversal. So a retracement is defined as a temporary price movement against the established trend. In the case of the left side of this chart, the established chart here, the established trend here, is an uptrend. So every small move against the uptrend is considered a retracement. So these blue boxes that we are marked here are all retracements. Another way to look at it is an area of price movement that moves against the trend but returns to continue the trend. So when this sell happened here, it was against the trend, but then the market continued going upwards, breaking this high, which means it's a trend continuation. The same thing happened, it broke this high, trend continuation. Then reversals are defined as a change in the overall trend of price. On the left side of this chart was an uptrend. But when this market broke this trend, it turned to a reversal, which means it started going in the opposite direction. So you can no longer call this a pullback, but a price reversal. When an uptrend switches to a downtrend, a reversal has occurred. When a downtrend switches to an uptrend, a reversal also occurs. Using the same example above, here is how a reversal looks like, which is what we have on this bottom part. The reversal here happened at this point. When faced with a possible retracement or reversal, you have three options. If in a position, you could hold onto your position, this could lead to losses if the retracement turns out to be a longer term reversal. So let's assume you entered this trade on this last pullback or retracement, and you held it and you were in profit over here. If you were not paying attention and this market came down, the moment this market broke this zone, you are no longer in profit, but you are now in loss. So you are left with an option to either close in loss or wait, because sometimes in the forex market, it always says that what goes up must come down and what comes down must go up. But what happens if the reversal takes a longer time to happen again? So if in a position, you could hold out on your position, this could lead to losses if the retracement turns out to be a longer term reversal. You could lose your position, that's the second option, and re-enter if the price starts moving with the overall trend again. Of course, there could be a missed trade opportunity if price sharply moves in one direction. Money is also wasted on spread if you decide to re-enter. Those are the downsides of re-entering a trade. But the money lost most times depends on your lot size. It's always a small percentage of your money amount you have in your account. So you can either decide to close your position and start again when the market decides to continue its movement to the upside, which sometimes you might end up missing the trade again. But it is better to sit on your hands and watch a trade that you did not take than you enter a trade based on FOMO. FOMO is an acronym for fear of missing out. So when you are, this trade is going in my direction, is going to go up, oh, let me buy, because you are afraid you might miss. Most times it is better to sit on your hands and not take a trade than it is to take a trade and lose all your money. The hardest part of the Forex market is having patience and waiting for your setup to mature before you enter. That's the hardest part of the Forex market. The third option is that you could close permanently. This could result in a loss if price went against you, or a huge profit if you close at the top or bottom, depending on the structure of your trade and what happens after. Is there any questions so far before we enter into risk management? Any question? Or if you understood everything I said, you can type 222 on the chat box. Let me know you understood what I was saying so far. Okay, that's one person. Okay, Tada Benson. If I get 3 people, I will assume that we all understood and then I move forward. One more person. If you understood everything I said, 222 on the chat box. All right, thank you, Casey. Thank you, Bongreat. Let's move to risk management. Risk management is what defines you as a trader. If you don't know how to manage your risk in the Forex market, it does not matter whether you are the best Forex trader in the world, you can end up blowing your account anytime, any minute, any day. So whatever it is you do in the Forex market, give risk management the greater attention than every other thing out there. So let's see what risk management is. Risk management is one of the most important topics you will ever read about trading. Why is it important? Well, we are in a business of making money, and in order to make money, we have to learn how to manage risks, potential losses in brackets. Ironically, this is one of the most overlooked areas in trading. Meanwhile, this is supposed to be the most the topic that people should pay most attention to. Many Forex traders are just anxious to get it right, to get right into trading with no regard for their total account size. They simply determine how much they can stomach to lose in a single trade and hit the buy or sell button, which is a very, very wrong way to trade. When you trade without risk management rules, you are in fact gambling. The only thing that separates a good Forex trader than someone who plays BetNaija is risk management. You are not looking at the long-term return on your investment. Instead, you are only looking for that jackpot, that one big trade that will give you all the money, and that is it. And that, for me, is gambling. Risk management rules will not only protect you, but they can make you very, very profitable in the long run. Sorry. The risk management strategy can make you very profitable in the long run. What happened? Sorry, I need to share my screen again. All right. So to be a Forex trader, when you spot a trading opportunity, you need to actually calculate the risk involved first. You need to think of your trade more in terms of the amount you are willing to risk over the amount you are willing to make. And that is why we always tell people the worst mistake you make as a trader is to, after calculating your stop loss, the trade is going to hit your stop loss, you start moving your stop loss. That is the worst thing you can do as a trader. Never, ever, ever, ever move your stop loss. If the market is going to hit your stop loss, allow it to hit it. No problem. Look for a better entry. And most times my trades are always, for you to be a profitable trader, the least type of trade you should take is a trade that have 1:2 risk-reward ratio, which means if you are risking 50 pip stop loss, you should be looking at a trade that gives you at least 100 pips. Sometimes I take trades that give me as much as 1:6 risk-reward ratio. If you are the type that take stop loss that are always huge, that are always bigger than your take profits, what this means is that you can take 10 trades and lose 4 of the trades, and you have lost all your money. But someone who considers risk before reward, you can take 10 trades and you win only 3 of those trades, and you are still profitable. What makes you a good Forex trader is not the amount of wins you have. You took 10 trades and you win 10. No, that's not what makes you a good Forex trader. What makes you a good Forex trader is your ability to make profits even when you lost more trades than you won. That's what makes you a very good Forex trader. So if you take, let me assume you take 10 trades using 1:2 risk-reward ratio, which means for every $2 you risk in your account, you are looking at gaining $4 or more. I've once taken a trade that my stop loss was going to give me a loss of 20 pips, but my take profit was about 150 pips or 160. If you take a look at that type of trade, you find out that is about 1:8 risk-reward ratio. That is what stands you out among all the Forex traders out there. So you need to concentrate more on risk management than you even concentrate on analysis. So let's take a look at the other slide. I think there are some things we need to touch on the slide before we take questions. And I don't know if there's any assignment for today. Okay, how to take trades with your mobile phone. Let's see. I think I need to switch to my phone for that. So everybody needs to open their MetaTrader 4 so that we can learn how to take trades with our MetaTrader 4. Give me a minute while I transfer. All right, the intention I had when I started this account was I wanted to grow the $8 account to about $1,000. Currently, that $8 account is currently at $41, $26 balance, which means I've closed some trades in profit to take my balance from $8 to $26. Then if you calculate and add the total trades I have running, the money I have in this account now is $41. This is an account that I started last week. If you look, you will see that this card JPY has a red sign at the left side of it. The reason is that I moved there's what we call stop profit. If you take a trade and your trade is running at profit, maybe you are in 20, 30 pips profit, you can decide to move your stop loss to break even. What this means is that you will now move, if your stop loss was above your entry price before, which is for a sell. Let me use this card JPY for example. My stop loss was above my entry price before, but if you take a look at this now, you will find out that my stop loss is currently below my entry price, which means even if this trade goes back and hits my stop loss, I will still close the trade in profits. The only thing is it might be a small profit. This is to prevent you from losing money. Instead of having a profit of $200, and before you know it, the market starts going up and you are in minus. It's better for you to always move your stop loss when your trade. Some people prefer moving their stop loss when it gets to maybe 30 pips. Some people move theirs when you move your stop loss depends on the type of trader you are. If you are a scalper, some scalpers move their stop loss to break even when the trade has done maybe 5 pips, 10 pips. If you're a day trader, you can move when it has done maybe about 20 pips or 15 pips. It depends on you. Some people move theirs when, like me, so most times I move my stop loss when my trade has done 50 pips profit. So it all depends on you and what you want to do. So if this market goes up now and hits my stop loss, I'm not going to lose any money. I'll make very small money. But if you decide not to hit my stop loss and continues to go down, then I'll continue making money. At the point where this market was, at this point, I was making, I think, about $8 profit. But right now, if you take a look at the card JPY, I'm currently in $1.07 profit. So it's all left for you. The reason I'm still leaving this trade is that I still have the mind that this trade is still a sell trade, which is why I don't take trades on a Monday. Whatever you see happen on Monday, 95% of the times, the moves that happen on Monday are always fake moves. They do that to draw people into the trade. On Tuesday, they still continue to make you think that the trade is really moving in that direction. On Wednesday, the market will reverse. That's what we call midweek reversal. Most times, midweek reversal happens Tuesday evening, but mostly Wednesday morning and Wednesday evening. So if you've been watching my status, you'll notice that I've been updating this account day 1, day 2, day 3. I did not update today because I did not take any trade. I don't take trades on Mondays personally. Some people trade on Monday. Like if you're a scalper, you can trade on Monday. If you're a day trader, you can trade on Monday. But for my type of trading, I don't take trade on Monday and Tuesday until evening around New York session, which starts about 1 or 2 o'clock. So it must not be your trading pattern. But when I train people, I always tell them, Mondays are always confusion days. If you, on the groups where I am, you will always see people crying about how they took a trade and it's going the opposite on Mondays and Tuesdays. And that's why personally, I don't trade Mondays and Tuesdays. I take my position on Wednesday and leave it to run. Whatever move you have that starts on Wednesday, you'll find out that the rest of that week, that move continues for the rest of that week until Friday. On Friday afternoon, we also have what we call fake reversal. Fake reversals happen mostly before the Friday market closes to force people to close their trade and not hold it over the weekend. But I already know all these things. So even when fake reversals happen, if I'm already in good profit, I leave my trade to run to the next week. Just like these trades, we are opened. CAD CHF was opened on 5th of this month, which was on Monday last week. The reason I took that trade was because I saw a very perfect setup and I took it. but mostly I don't take trades on Monday. Then if you take a look at CAD JPY, you'll find out that it was opened on 7th, which was exactly the Wednesday that I told you about. That's when I opened my trades. Then some trades I closed today because they were really going crazy. I closed it, Euro USD. I opened it on 8th, which was on Thursday. This one also was opened on 9th, which was on Friday. So you can, it depends on your trading pattern. You can decide to take the same, don't trade on Monday. It's all left for you. So let's learn how to take trades. We're not going to be doing that on my live account. So let me switch to that account we created that day. We were doing practice. Okay. This is loading right now. Let me see if there is any particular trade we might take. While I'm taking the trade, I would like each and every one of us to actually take that trade as well. And maybe with time, we'll see how the trade goes. I want to take a buy on Euro USD based on my personal analysis because I believe Euro USD is going to buy for this week. Now, let me share the screen of my laptop so that I'll show you my personal analysis on Euro USD so that I can see why I said I'm taking a trade on it. All right. I believe we can see my screen. This is actually the reason I'm taking Euro USD as a buy. This was the analysis I sent to one of my groups. If you take a look, there is what we call horizontal support and resistance, which is your normal, the one we talked about right now. The other trend line support and resistance is an advanced training. I don't know if it's in this slide we are going to use, but if it's there, we'll touch it a little bit. If you take a look, you are going to see that there is a line that was drawn here. This line now is not actually vertical or horizontal. It's a little bit slanted. Then if you see on top too, you will see that there is a line drawn on top. This is not your normal horizontal support and resistance. This is trend line or channel support and resistance. Now, when the market came down here, it hit this line, went up, came down again, touched this line, went up here, created a high here, came down again and stopped on this line again, went up again, touched the top of this channel. This is actually called the trading channel. And then came down. If you take a look, you'll find out that last week, the market came down to this line again and started going up. So this is one of the major reasons I am counting on Euro USD to buy. Don't forget, this analysis might be right, it might be wrong, but most times I trade this kind of setups. So what I am expecting is this price to go up to the top of this channel again, and then probably come down. It depends. If it finally breaks any of this channel, either upwards or downwards, if it breaks it downwards, I'll be looking to sell for a very long time. If it breaks it upwards, I'll be looking to buy for a very long time. So this is actually the reason why I said, let's buy Euro USD. So open your demo account on, don't mind me, the triangle I drew here is actually called a rhombus strategy. This is we like call it a more advanced type of market analysis. I pray maybe one day we might get there. So let me stop my screen share and let's switch to phone so that I will show you. All right, please, if we all have our MetaTrader 4, please, can you type 111 on the chat box before I continue? If you have your MetaTrader 4 open, 111. Okay. Okay. All right. So check your home screen. There are on the bottom part of your screen, there are different buttons you can press. If you take a look at where mine is on the first one. The first one is where all your pairs are listed. So make sure yours is on that first one. Check if you can see Euro USD there. If you can see Euro USD, tap on it and click open chart. If you cannot see it, click on this plus sign on the top right corner of your screen. Go to Forex Majors and look for Euro USD and add it by tapping on it. So I'm going to give just 30 seconds for that. Are we all there? Euro USD charts. If you are there, type yes so that we'll continue. Okay. Okay, all right. So let's continue. On this page, when you click, just change it to H4. Change it to H4 time frame. Mostly, I prefer using H4 to trade. But do not use H4 if you don't have a large amount. But I can use H4 for my $8 account because I already know how to analyze my trade and make entry. It is always good. Okay, Ada, if yours is showing M5, tap on your screen. You will see this circle will appear. Look for H4 and tap on H4. If you have changed it, let me know. Just a single tap on your screen. Don't tap and hold. Just tap it small. It will bring out this circle. Click on your H4. Okay. Now, the last time I attended a training where we were taught about rhombus, this rhombus strategy I talked about, is a training we actually paid about $120 for. The guy loves trading on the 4 hours. Okay, what is different in your chart, Ada? What exactly is different? Can you unmute yourself and tell me?
Parts, you have green and red and all that, okay? So, but for me now, just one blue line that goes like this. Yeah, that's all. And okay, basically that's.
What you have to do is ignore those blue, red, and green lines you are seeing. It is part of my strategy. It's called indicate an indicator. Then if you go under, you will see this, let me put this place where you have my crosshair. This thing you are looking at here is called awesome oscillator. It's another indicator I use. We have not gotten to indicator trading, so leave that. It's actually strategies. So you will not have the same thing I have. The most important thing is, do you have your candlesticks? Or maybe I will just remove these stuffs so that we all have this.
I have my candlestick.
Yes, that's the important thing.
But my entry prices are different from yours.
What's your entry price?
I'm saying, okay, yours, the blue highlight you have on your own screen. May I have a blue highlight of 1.18592?
Okay.
And then I have a red highlight of 1.18630. Yeah.
Okay. Now, what you need to know is that brokers are different. What you have as entry point, if you are using for FXTM and I am using ICM, our prices will never be the same. Every broker has their own price, but if you take a look at them, you find out that the difference between most of them will not be more than 2 pips, maybe 2 pips, 5 pips. It is not always more than that. So your broker, if it's different from my broker, they will never have the same price.
Okay.
So it doesn't make any difference. It's just your broker and my broker.
Okay.
All right, so hold on. Okay, so now if you want to take trade, let's assume you have finished analyzing and your trade your analysis says buy. If you look at the top right corner of this screen now, you are going to see a plus sign that is inside a box or inside a, what we like, a rectangle. So click on that plus sign, then you are going to see exactly what I have on my screen. Are we there? Okay, okay. So you're going to have exactly what I see on my screen. So we want to take a buy on Euro USD. It may hit stop loss, it may not, but we're going to take a buy on Euro USD, set our stop loss and set our take profit and see whether it hits it. So if you have 0.01, okay, before that, the first thing you are seeing there is market execution, which is exactly what we want to do right now. I don't want to set a pending order. I want to enter the market currently right now at the price where the market is. So I will leave this at market execution, but if you tap on it, you will see all those types of orders I mentioned last week. Market execution, buy limit, sell limit, buy stop, sell stop. So leave it at market execution because we want to enter the trade right now. Now let's change. I believe each and every one of us is in the 3,000 accounts we created. Because of the amount we have in that account, let's change this. Tap on this 0.01 at the center here and hold it until it highlights. Once it highlights, Ada, you said you have instant execution. Well, was it MT5 you downloaded or MT4? Because I don't know. Let me see my MT5. I think it's MT5 that has instant execution. It's the same thing. Anyway, it depends on the MT4 you downloaded. Instant execution, market execution is the same thing. They're basically the same thing. So tap on this 0.01 and hold it until it highlights. Let's change that to 0.50. Please don't do this at home. The highest you should be trading right now for a start is 0.01. I'm just using this as an example. So change this to 0.5. If you've done that, type 1 on the chat box. Okay. Okay. 0.50. All right, now, is there only 2 people that have done it? Only 2 people. Are others following us? Ada, where are you exactly? Where are you right now? So that I will know where you said I should go back to. And I'm waiting. You said I should go back. Where exactly are you lost so that I will know what to go back to? Okay. Now, under your instant execution or market execution, whatever you have there, you will see numbers there. You will see 0.1 minus 0.1 that is not highlighted, minus 0.01 not highlighted. Then you will see 0.01 at the center that is black. That is what I asked you to tap. If you take a look at my screen, you will see that it is highlighted. The center of those numbers is highlighted. So that's why you tap on it and hold it until it highlights. Are you following now? Have you tried yours, Ada? All right, Joe, if you are here now, we're actually trying to take a buy on Euro USD. So if you're on this page, I don't know if you're on this page now, where we are. If you are there, type yes so that we'll know how to proceed. Okay, now the types of orders I talked about, market execution, buy limits. Once you come here, you always see market or instant execution highlighted. So it depends. If you wanted to do a sell limit or buy limit, then you have to change it by tapping on it. But what we want to do is an instant execution. So leave it at instant execution. Then below it, you are going to see the numbers there. Minus 0.1, minus 0.01, minus 0. Tap the one at the center, tap on it and hold it. It will highlight just like mine is highlighted now. If it is highlighted, change it to 0.50. If you have done that, just let me know on the chat box. Okay, now 0.50. Now, another thing you can do is if you take a look at the left and right side of that 0.50, you will see minus 0.1 and minus 0.01. Let's say you have 0.5 like it is, and you want it to be 0.4, which means you want to reduce it by minus 0.1. If you tap on this minus 0.1 here, it will reduce it to 0.4. Tap it again, it will reduce it to 0.3. You can do this so that you will avoid typing plenty. You understand? You can actually, let's say when all of us started, it was 0.01, just like this. If I decide to do 0.5, I can actually add 0.1 into 5 places. 1, 2, 3, 4, 5. It gives me 0.051. Then I will now remove 0.01 that is there by tapping minus 0.01. It will still come back to 0.5. So those are ways you can change the figures there. You can actually do it by tapping or by typing. Then once you are done with that, let's leave the stop loss and the take profit now. Usually we would have calculated and put it before clicking on buy, because some people actually end up forgetting. So you always calculate your stop loss and take profit before coming here so that you write it down and then impute it before. So now what we are going to do is we are going to click on buy. There is a buy button below. Click on it, buy. If you have done that, you should hear a sound. Let me know if you hear that sound. Let me know if you have what I have on my screen. You should be in loss right now. If you have clicked on buy and you are seeing what I'm seeing right now, type yes on the chat box. And if they said no connection, then it is from your network. Do it again. Tap the buy again. It's from your network. Jude. Minus 21.5. Which broker are you using, Biko? Are you sure you people actually opened the ECN account? Because if you open your ECN, if you open an ECN account, it should have a tighter spread. The spread should be a little bit tight. Okay, Ada, what do you have as your loss? Can everybody put what they have as their loss on the chat box? -2, gone great, okay. Who else? Put what you have in your loss, or if you are in profit, put what you have in profit. -22.5. Okay. And you are sure that what you use is 0.5. Is this 0.50 you used? -19.5. Okay. Now, this is different because of the brokers. So can you all tap the top left corner of your screen and tell me what you are seeing? If you see, my own is showing Forex Time FXCN ECN demo. So just show, let me know what you have on your own. Top left corner, let me know what you have as your broker. Like you're seeing my Forex Time FXTM ECN demo. The same thing. Now, wow. Okay, one more thing I need us to do. Is everybody confirming that they have the same thing? Okay, Joe, MetaTrader 4 Android demo is the what do you call it? Automatic account that was opened for you when you downloaded your MT4. And that is why you, Ada, and Julius have similar. Julius has Jafex demo. Jafex is a different broker, and it's not even their ECN account. We are talking about maybe their standard account. So that's why you people have different results from what I have. Now, if you want to know that, remember when I taught you about spread, go to your home page, look at Euro USD. If you have what I have, most of you will have simple view like this. So tap on any of the currency pairs, change it to advanced view mode, and tell me what you have as your spread on Euro USD. If you take a look at my spread, we have 7 as my spread on Euro USD. So check what you have as your spread by changing to advanced view and type it on the chat box. You find out that most of you have more than 7 pips spread. KC, we have the same spread with me. Change to advanced view. On this last button on the bottom, you see, Ada, what you need to do on the bottom part of my screen or of your screen, you will see some buttons there. You will see one of my own is highlighted in blue. 2 arrows. Click on those 2 arrows to take you to the home page of your pairs where you have all your pairs listed. Then when you get there, tap on any of the pairs. Click on, you will see advanced view. But if you do not see advanced view and you see simple view, don't click on anything, just cancel it. Change to advanced view. Joe already has put his own. He has 42 in his spread. So Julius, I don't know what you have in your spread. Casey, you should have the same spread with me because we are using the same broker. So Ada, check your own spread and let me know. Yeah, bond grade 7, the same thing with mine. Julius, what do you have? Is it still on the call? I'm still waiting. What do you have? For your Euro USD alone, what do you have as your Euro USD spread? If you see mine on the screen, you will see it is 7. Under Euro USD spread 7. Okay, yours is fluctuating. That is the reason why you have a greater loss. You know why? The spread of your, Julius, how do you get advanced view? On this page, are you on this page where I am now that has all your pairs? Type yes if you are here. Tap on any of these currency pairs or anywhere on the screen at all. Tap anywhere. You should see these options. Then click on advanced view. Yeah, click on advanced view. Then go check your Euro USD. Tell me what the figure of your spread is or the value. No, not that. You are telling me the check where you have Euro USD written. Check under it. You will see one time. There's a time there. That time is telling you how many minutes or hours is remaining for your current candle to finish. Then if you go below it, you speak, okay, yeah, 17. So that is the reason why you have different results from me. My own spread is 7 pipettes. What this Joe's own of 47 means is that the spread is 4.2 pips, which means 4 pips, 2 pipettes. That's your spread. So for you to go into profits, your trade needs to move in your favor and go above your entry points by 4 pip. Meanwhile, if my trade goes in my favor by just 7 pipettes, which is less than 1 pip, I'm already in profit. The broker I use, let me show you. ICM, you will see that my Euro USD has 0 spread. Okay, it's 3. So which means once I take my trade, before you know, the reason why it's 3 is because at night when the market is about to close, the spread is always high. Or when all the sessions close, the spread is always very high. Sometimes you see 3 pipettes spread during the day, and at night around 10, 11, and I bet, I don't think, let me see how many minutes is remaining for the daily candle to close, or whether the daily candle has closed. Let me change to daily. Okay, the daily candle has actually closed by 10 p.m. So it has done 1 hour. That's why you have 1 hour on all the pairs. So that is why that spread was high. So most times you will figure out that at the end of the day, this spread will start reducing once the market open. The brokers usually use this to make people to get scared of entering trades or to lose some money. So most times it's not advisable to take a trade when a session, especially at night from 10 p.m. when the daily candle is about to close. Always wait for maybe 1 hour into the daily candle, and then you take your trade if you must by that time. So let's go back to the trade we're taking now and see where we are. So mine has increased to $4 loss, which means most of you should be in higher losses now. If you take a look now, the spread is fluctuating. Mine is coming down to 5, 6, back to 7, 5, 6, back to 7. So the spread is not always constant. It changes depending on how volatile the market is. at that point in time. So let's leave this trade. Now let's calculate our take profit and stop loss. Now you guys are going to be the one doing this. I took our entry point, my own entry point is what we will use to calculate the pips. You might have different entry points because we all entered at different times, but it will not be far from mine. My entry point is 1.18626. So my stop loss, for my stop loss, I want to use, let me see. Entry here. I want to use a 90 pip stop loss because that is just below the last support. So I want to use a 90 pip stop loss. So can you people calculate 90 pip stop loss on a Euro USD buy, entry price 1.18626. I want the entry, the stop loss. Let's see if you guys have been following. $90 pip stop loss. Yes, the entry is 1.98626, Joe. So let's get the stop loss. Babe. Okay, I have one answer. Let's have more. Let's have more. More answers, please. Okay, more answers are coming in. 1.207626 stop loss. 1.189626 stop loss. 1.189626. Yes, this is a buy, Joe. Have you forgotten we took a buy? 1.18170. I've not seen Mark on this call. He's just here and he's not actually participating. All right. I think we all have done well, but there's only one person that actually got the answer here. And that person is born great. The stop loss is 1.17726. That's the stop loss. If you are confused, unmute yourself.
Hello.
Yeah, Ada.
Okay, so please, I don't know, I'm confused. I need you to explain. I thought you said the entry price. I thought you said the entry price is 1.198626 and the pipette is 90 pipette, right?
Yes. Yes, that's
And it's a buy order.
Mhm.
Is it not supposed to be entry price minus the pipette?
Entry price.
That is, I'm listening.
It's the entry price minus the pips.
Mm-hmm.
Yeah.
The pips rather, and that's 4 decimal. That's for you move the decimal like 4. I don't know, like 4 times or something. I don't know how it's supposed to be.
4 times to the right. But the mistake you guys made, the mistake you people made.
It's 1.18, not 1.119.
The entry price is 1.18.
You said is what?
The entry price is 1.18.
1.18.
Okay, let me, I think I figure out the mistake most people made. The mistake most people made is that you added the last figure, which is 6, which is a pipette. So you're supposed to be dealing with 1862 only. If you add this 6 and deduct 90 from it, you will get a different answer. So most times you ignore this pipette. Ignore this pipette here, and then do 18626 minus 90 and see what you get. And when you are sliding your decimal place to the right, the decimal should be in between. It should be 1862.6. So you slide to the right, starting from 2, not from 6. That 6 is insignificant. That's the mistake most of us made. And if you use that way,
Sorry.
I actually talked about the second way I talked about today. What you would have done is ignore the 1 point, the beginning 1 point, then do 1862 minus 9. Joe.
Our mistake is that I used Joseph
1.19 was what we used. That's why.
Yeah, that's why I used the 1.1986.
Okay.
Please, you can check the entry point I asked you for before. That was the mistake.
Yeah.
I was in 1.19.
Yes, and because he confirmed it, and that was why I used it. Yes.
That's right. We would have gotten the same thing with bond grade.
Yes, yes, we would have.
Okay. All right. So I guess we are correct. Okay, yeah, now I see. I just did 1.19 minus the pip and I got the same answer you put sent. Then Julius, I don't know how you got 1.1817. Julius, can you unmute yourself? Hello, Julius. Okay, hold on. Let me see if I can unmute you from my side. Okay, try it now. Try your unmute now. Okay, so how did you get your answer, 1.1817? We can't hear you. Julius, I don't know if you're hearing us, but your mic is unmuted, but we cannot hear you. Or maybe you can just type on the chat box how you got, if it's not going through, you can just type on the chat box how you got your answer. Because I need to be sure that everybody gets this right. Okay, while we are waiting for him to do that, let's continue so that will not take much time. I would have actually told us to use very big lot size to open this so that people will experience what it feels like to lose big money, because if you can't get accustomed to that, you can't trade in the Forex market. So losses are part of the Forex market. Okay, Julius said he understood now. Okay, no problem. Losses are part of the Forex market. If you use 10 standard to open this trade now, this minus $7 I'm having here would have been minus $140. And then you see people sweating under AC, you know? But the idea is always learn to use small lot sizes to start learning. Don't ever start trading with big lot sizes. If you get used to it, I need to tell you people, the first time I started trading, my first $3,000, I blew it. I know they hide them so that you will know $3,000 now is 1.5 million. It took me time. I thought Forex was go come and then you make money. Then I forgot that I have to do demo. I did demo for 1 week and then I said, I don't perfect, make I trade. So we really need to be careful. And that is why if I had people telling me what I'm telling you now, maybe I will not make the mistake I made those periods. If you want to start trading, start small. Even if you have the money to start with 10,000, do not put 10,000, put $100 or $50. Start trading with it, grow small accounts. It is the way you handle small accounts that you learn to handle big accounts. You understand? Now, if you take a look at this screen, there is a figure on top left corner, and then the figure beside the Euro USD. Can anybody tell me what they notice in those two figures? You can type or you can unmute yourself and say it. There is a figure on top left corner. There is a figure beside the Euro USD you took as a trade. Can anybody notice anything between them? Anyone, please unmute or type. Hello, are they still with me? Okay, the one beside USD changes. Both of them actually changes. Both of them change. If you look closely, you'll find out that both of them changes. But there is a key difference between the two of them. Where is everybody, please? One is in a ratio form. Okay, yeah, here, Joe. Okay, please, I need to know the major difference between the two of them. Okay, without wasting much of our time, let's not waste much of our time. If you take a look at the two figures, you'll find out that one is greater than one. One is bigger than one. The one on top is showing 8.25 loss. The one below is showing $6 loss, which both of them changes. But the difference between both of them is usually 2.25 if you check. So the difference is this. If you open if you tap on your Euro USD, it will open this option. Hey, it will open these options. Sorry, my son is actually trying to pull some stunts. So the two of them, the difference is 2.25. Take a look at the options you have here. You will see commission minus 2.25. This commission was charged the moment I clicked on buy. So that is why the difference between this one is reflecting the commission, this one is not. So if you lose your trade, you are not going to lose this $6. You are going to lose 8.25, which is your amount and your commission. Every single trade you take has commission to it. Some of them has not really. Commission is always charged. And then there's another charge, swap. Swap is always charged when you hold your trade overnight. If you hold this trade now, the reason we will not be charged swap this night is because we took the trade when the next day have started. We are already in the Forex market. We are already in the next day. So this swap will give you a charge by 10 p.m. tomorrow evening if we hold this trade till then. Some trades have positive swap and some have negative swap. If you want to know the swaps attached to every trade, you come to this home page. The demo is showing me only swap charge, no commission value. Anyway, some brokers don't charge you. I don't know. I think some brokers don't charge swap. Don't charge. I don't. The demo is showing me only swap charge, no commission value. Joseph, I don't know, Joe. You know that's whatever that's automatic account that was opened for you. I don't know how they operate. But most brokers, once you take your trade, the charge is dependent on the lot size you use. This charge that you're seeing 2.25 now, if I use times 10 of this lot size, which is five standard lots, I will have a commission. This commission will be times by 10. If I use 0.01, this commission will be divided. It depends on your commission, on your lot size. Okay, I have 0.17 on swap, but not on commission. Some demo accounts don't charge commission, but anytime you take a live trade, you most likely always be charged commission depending on your broker. The commissions is different based on the broker you are using. If you want to figure out, go to Euro USD or any pair on this your normal page where you have your pairs. Tap on it. When you tap on it, tap on symbol properties. This is going to show you spread floating. Floating means your spread can change anytime. Then digits means what your current pip is now, what your current spread is now. My own is 5. Then contract size. I don't really know what contract size. There's a way they calculate it. I've never paid attention to it. Then swap type in points. Oh, sorry. Swap type is in points. That is why I have 7. And you, Joe, you have 4.7, which means it's 4 pip, 7 pipettes. So whatever you see there, If you have 7 there, it means you have to divide it by 10 to get what exactly your PEEP, the spread of your PEEP is. Your spread is in pips. Sorry, Joe, your own was 47. If you divide it by 10, you have 4.7, which means 4 pip, 7 pipettes is your spread. So in points, if it was in PEEP, it will show you 4.7. But since it's in points, that is why you have 47, you divide by 10. Then swap long. If you are holding Euro USD on a standard lot 1.00 and you hold it overnight, your broker will charge you $6.09 every day you hold your trade over the night. They will charge you $6.09. If you are holding it for a sell, this one here, swap long, is for a buy. If you are holding like this, our buy now. Since we do not use one standard, we use half standard, which is 0.5. This 6.9 is going to be divided by 2. Whatever is the amount is going to be charged on this trade every day that this trade is open. Then if you are selling, every day that your trade is open on a standard lot size, the broker charges you 0.3, which is 30 cents every day. Let's try another one. I think there are some that has positive swap. Let me see if I can find a pair that have positive swap. I think some exotic pairs might have positive swap. Let's try. Okay, now take a look at my screen. This is GBP Danish Krona. If you take a look, their swap long is positive 9. So what it means is that for every day you hold a buy trade on this, the company actually gives you $9 if you are using one standard lot. For every day you hold it to the next day, the company gives you $9 every day. If you hold it till 10 p.m., they'll give you $9 by 10 p.m. You hold it another day, they give you $9. But if you are selling, if you hold it overnight on one standard lot, they will charge you $74. So that's the difference. In some pairs have positive swap. Let me see if there's another one that has positive swap here. So this is why you need to be careful the pairs you take. If you take a look at Euro Try, this is Euro and Turkish Lira. If you are holding a buy and hold it overnight, they will charge you $261 in one standard lot, on one standard lot rather. If you are holding it on a sell, they will charge you $127. So you see that for you to hold this trade, you need to know that the trade is really going in your direction. So that is why most people don't trade all these exotic pairs, because their swap most times is usually crazy. Wow, we are in profits. Is anyone in profits? If you're in profits, type yes. If you are in profits, type yes. Casey, you should be in profits. Joe and the rest might be in a little bit of loss or in a little profit. But Casey, you should have the same profits with me. Joe, -5 is reducing. Casey, you have the same, yes. Any other person in profit? No, these blues, when you are seeing these blues, it usually gives enough joy. That you are making noise. Shit. Any other person in profits? -5 for Ada, -1 for Joe. Yeah, my profit is actually increasing, so your loss should be reducing. Before you know it, you enter profit. So that is why you need to know the broker you are using. Before you end, you need to know, like me, if your spread is not tight, I'm not using you. My broker that I'm using is actually, they don't have an office in Nigeria, but I don't care, because I've researched about them. They are one of the best brokers in the world. They have a very good tight spread. So we're actually in profit. Let's see how much profit we can be able to make between today and tomorrow, or before Friday. Personally, I'm going to use this till Friday. So let's put our stop loss. Let's edit our stop loss. We're almost done, don't worry. Okay, so let's put our stop loss and then calculate our take profit, and we'll call it a day. So I believe that will take care of everything. If you need to type your stop loss, what was our stop loss again? So can someone type our stop loss again? I can't remember. Let me see if I can find it. Can someone type our stop loss? Okay, 1.17726. $1.17726. So this is what I need to do. If I need to input this as my stop loss, before then, let's calculate this take profit so that we can put it at the same time. So my take profit, I already know where my take profit is going to be, but let's make that assumption and calculate the take profit. Let's see. Our entry was 1.1862. And I want to do a 135 pip take profit, which is actually where my take profit is on this trade in my real account. So let's calculate a 135 pip profit. 135 pip profit. Let me see if we'll get that. Remember, it's a buy trade. Okay, I have two answers. Any more answer? I actually need everybody to participate in this. So Joe and Julius, I'm waiting for both of you. My earpiece is about to off. Okay, let's be fast before my earpiece goes off. I don't want to get feedbacks. My phone is down. Joe, are you still on the call? And Julius? Okay, 1.1951. 135 peak take profits. 135, yeah, 135. Okay, 135, Joe. 1.19612. Julius, are you still with us? I don't even know if you're still here. Okay. All right. I don't know if Julius is still with us, but let's continue. The answer that Born Great and Ada seven, okay. The answer that Born Great and Ada gave me are actually the correct answers. So Joe, I think you made a mistake. Let me see what you did. 1.19612 minus 1.18626. Joe, your answer was actually for 98 pip take profits. So I don't know how you did your calculation. The answer you gave me is a 98 pip take profits. Our entry is 1.18626. 1.18626. The same entry as usual is showing on the screen. So I guess maybe, I don't know if you use the stop loss. You used the stop loss and added the entry to it. Oh, okay, okay. That's the mistake you made. 1.18626. Okay. At least you got the idea. You have the idea behind the calculation of stop loss and take profits. So now we have to input our stop loss, which is 1.1. Let me see. 17726. 7726. TP is 1.1 9976. Okay, so let's impute these figures and know how to impute it. Once you have your trade running, you can also use this format to edit. Let's say you want to edit your take profit. On this page where you have your Euro USD and your profit and your loss running, tap and hold the Euro USD, tap and hold it, and you get these options to open up. If you get to this place, type yes. Tap and hold it, you will see these options. Are we here? Okay. Anyone else? Okay, Ada, Joe, and Julius. Hey. Okay. All right, so once you tap on it, you will click on modify order. There's a modify order there. Tap on the modify order. You should have a page like this. If you are where I am, type yes. Okay. Joe, are you with us? So once you are here, there are two numbers that have There are two numbers that have 0.0000. There are two boxes. One is red, the other one is green. The one that is red is your stop loss. The one that is green is your take profit, always. The one on the left is your stop loss, The one on the right is your take profit. If you are, okay, I think what Ada, you are using an iPhone, right? I think Ada is using an iPhone. That's why she has instant execution instead of market execution. Ada, you are using iPhone. Okay, I don't know why yours has that. But what you need to do now is the first number that has red. Some of them, you will see one on top and one below. The one on top is always your stop loss. The one below is always your take profit. Okay, you guys are using the same broker. That's why you have instant execution. So click and hold on the 0.00. The first one, you see my N is highlighted. So look for the stop loss and impute the value of that stop loss there. 1.17726. That's my stop loss. If you do anything wrong, this modify will not highlight. If you do like, you see it's not highlighted now. If you do anything wrong, the modify will not highlight. Let's say you made a mistake and put the stop loss for a sell, a buy, a sell into a buy. They will not be highlighted. So 1.17726. Then on the take profit, also highlight or just tap there, it depends, and type 1.19976. If you interchange the numbers, put stop loss in take profit and take profit in stop loss, it will not highlight. So always ensure you do the right thing. Once you've done that, you click on modify. You will hear that sound. It has modified. Then if you tap on this home screen on this Euro USD, you will see your stop loss and you see your take profit there. So if you've done your own, type done. Okay, type done on the chat box. Make sure you hear that sound and you see the green that says, is it what does it used to say again? Edited or something, I don't know. If yours has done, okay. Ada, what about you? Okay, so that's all for how you can take orders. Take your order, calculate your stop loss and take profit, put it there, that's all. If you take a look, we are currently in loss again. That's how the Forex market works. You can be in $20 profit before you know it, you're in Z minus 2.5 or minus 5 point something. That's how the Forex market works. We have scalpers. A scalper would have closed that amount we are making and look for another entry. Maybe he will enter it like 10 times. Once he makes profit, he closes it and start looking for another opportunity. But the problem with scalping is that it is easier to lose money if you don't know what you're doing as a scalper. Because you can take a trade wrongly and you find out that it's going in your direction wrongly and you're losing so much money. And because scalpers use big lot size, it will always affect you. Trading is a psychological thing. One of my mentors said that Forex market is taking money from the impatient to the patient. That's what the Forex market is about. So you need to develop patience in this industry. So that's it about everything we have. Let me see if there's something I've not touched. If you have a question, you can ask your question. Chicams, well done. And whenever you want to take trade, ensure that you don't risk more than 1 to 3% of your account. Let me show you. There is a site where you can calculate your risk. There's a site where you can calculate your risk. Let me show you that. Because I just saw that on the slide now. Let me share my screen. You can write the site down. Let me see. Okay, the site is called myfxbook.com. myfxbook.com. Let me write it on the chat box. So you can go to this website, you can calculate your risk there. Let me show you how. If you come to these calculators, if you open the site, you see calculators. Look for position size calculator. You can as well download the app. It has an app. So what we are looking for here is position size calculator. Click on position size calculator to open for you. So Euro USD is the pair we are trading now. Let's say we calculated this thing before we enter the trade. What we would have done is change the pair here, your currency which your account is in. Some people like me, I like my account in pounds because pound is higher than dollar. Some people prefer USD, but our advice start with USD. Then put the amount you have in your account. If it's $100, put $100. Let's say I have 1,000. I put $1,000 here. Risk reward, risk ratio is the amount of your account you are willing to sacrifice for this trade. And I told you people, do not sacrifice more than 3 for a beginner. It is between 1 to 3% of your account. Don't go higher than 3%. So let's say I want to sacrifice 2% of my account. I want to risk 2% of my account on this trade. $1,000, 2% of $1,000 is actually, I think, $20. So I'll put 2 here, 2%. I will now put the value of my stop loss. Our stop loss is, let me see. Our stop loss, this will actually show you the lot size you should use on the trade. Our stop loss is 1.17726, and I'll take okay, 1.17726. Sorry, our stop loss should be in pips. So in the case of we use the 95 pip stop loss. So I'm putting 95 here because if you look at it, it says stop loss in pips. So I put 95, that's the number of pips. And then click on calculate. Then you see the lot size it gave me. So which means on a $1,000 account, I am supposed to use 0.02 lot size. If you see here, it says money in USD that I will lose $20, which is exactly 2% of $1,000. So I put 95 pips and click calculate to show me the lot size I am supposed to use. So let's say our account is $10,000. If you calculate 2% of that, you see that the lot size you're supposed to use is 0.2. So the higher your account, the higher the amount of money you can make in trading. If you actually want to use the calculator to check what you need to do right. If I was risking 3% of my account, I calculate it, it will show me 0.32. If I was risking 1% of my account, which means I want to risk only $10, calculate it, it will give me 0.11. So I don't ever enter trade unless I calculate it on this website. So you can always use this site as to calculate what you are doing. Let me see if there's something else we're missing. Okay, I think that about does it. All right, do we have any question before we call it a day?
Hello? Can you hear me?
I can hear you, Casey.
Please have explained that VIX, that calculation again.
Of the pips, of the like one, the how many percent you want to risk?
Yes, from that site.
Okay. So position size calculator. When the position size calculator opens, you first thing you need to do is to change the currency pair you are trading. You want to trade. So what trade we took was Euro USD. So I will leave it in Euro USD because that's always the default. Then this currency, most people use US dollar. So you leave this, see this boy is retired. So you leave this in USD. Then account size, you will put the amount your account is. Let me use mine for an example. I have $26 as my account size. So I put $26 here. But $26 is actually small. So let's assume I have $1,000 account. I will put the account size $1,000. Then I told you, don't risk more than 3% of your account for every trade. The reason is this. If you are risking 2% of your account, you will need to lose 50 consecutive trades before you blow your whole account. Because 50 times 2 gives you 100%. If you are risking 3% of your account, you will need to lose 33 trades before you blow your account. If you are risking 1% of your account, you will need to lose 100 trades to blow your whole account. And this must be done consecutively. So depending on you, you now want to decide, okay, how much am I willing to risk? So let's say you are willing to risk 2% of your account. On this risk ratio, you put 2%, 2. Then your stop loss, you should know the amount of stop loss you want to use for your trade. When I was calculating our stop loss, I told you that let's use 95 pip stop loss. Sorry, I'm coming. So I'm coming. So what you need to do is that 95 pip stop loss, on this stop loss in pips, put 95 there. Then this total size lots, I don't know, I just leave it, I don't touch it. Then click on calculate. What you are concerned with is this size in here. This is telling you that the lot size you should use is 0.02. That on a $1,000 account. That 0.5 we used in our trade should not have been one. Okay, we had $3,000 account, Abi, 3,000. So if I calculate using that 3,000, what we would have used if we want to risk 2% of our account is 0.06. So what this means is that we actually over-leveraged our account by using 0.5, because what we use is almost times 10 of what we were supposed to use. So meaning that we risk 30% or about 20% of our account, which is very bad as a trader. You should not risk more than 3% on every trade. If you are taking 5 trades, 3% or 2% or 1% on each trade, and you should not aim to lose more than 10% of your account every day. That's what makes you a good trader. That's total of all your losses in every day should not exceed 10%. So if you are using 3% per trade, which means if you lose 3 trades every day, go and sleep. If you are using 2%, if you lose 5 trades every day, you go and sleep and forget about the day. If you are using if you are using 1%, if you lose 10 trades every day, go and sleep. So I hope it's clearer now. So what we would have used is 0.06. Casey, I hope this is clearer now. If it's not clearer, when I'm done with the video, you can watch it again and rewind. I believe you, if you do that, you will get it clearly. Do you have any other question?
For the sorry,
okay.
For the stop loss.
Yeah.
Okay, it's me to choose any number I want.
Yes, any number of stop loss. You are the one that is supposed to choose the stop loss you want. Now, let me show you how I chose my stop loss so that you understand.
It will affect
the lot size you are supposed to use. Let me show you how I chose my stop loss so that you understand. This is actually my chart. This is why I chose the stop loss I used. This was our entry point here, somewhere around here. There are some people that can decide to put their stop loss below this last swing here. But where I used as our stop loss was below this last low here, this one. That's the one I used. So here, let me draw this is the zone I used as our stop loss. Some people can actually prefer to use this zone here, so below here. Because don't forget what I told you, that if a trade breaks the last low, it means it has started in another trend. So the assumption is that since I'm buying, if this trade breaks this low and comes below here, there is every chance that the trend has changed. But sometimes the problem with this trade is that these brokers or these market makers know that many people are going to place their stop loss below here. So they might want to come and do what we call stop hunt and take out everybody that puts their stop loss here and continue moving up. So most times I prefer to be on the safe side, put my stop loss here. But for you to do this, you need to actually be very good in analyzing the market. Put my stop loss here and leave my trade to run. So this is where I used as our stop loss. So which, if you check it from here, from our entry, which was 1.1862 something, if you check it from here, let me check the calculator here. Check it from here, you will see that it is about 80 something pips, which is not far from 95 pips. So our stop loss was actually, actually a little bit below here. About 95 pips, which was around here. If you are seeing my screen, you will see that this place, there's a place here is written 95.3. That's the pips. This other one is that sliding your zero to the right I told you about. So the figure here is 0.00953. So if you slide your figure 4 places to the right, you get 95.3. So I hope this is clear now. Your stop loss will depend on your analysis. There is no fixed stop loss for any trade. I can take this trade and use 30 pip stop loss. I'll use 10 pip stop loss or use 15 pip stop loss. Depends on my analysis. So do we have any other question? Any further question? If there is none, maybe we'll just call it a day. Let me just end the recording.